watching A to Z of stock market investing. Today we'll deal with insider trading. The stock market operates on the principle that all the participants in it have the same set of facts and figures about the companies they trade on. With people having access to the same set of financial and market data about a company, they pit their analytical skills against each other to make buy or sell decisions in stocks. And people basically win or lose on their positions based on how much knowledge they have of the financials and what they can make of it. However, what will happen if somebody has special information about a company which nobody in the public has and uses that to make an unfair gain on the stock price? This is what is called insider trading. People are barred from using this kind of information to trade on the stock. SEBI has recently widened the ambit of the definition of insider in its insider trading regulations. Basically, apart from employees, directors, promoters and other entities who are already insiders, SEBI also brings into its ambit auditors, bankers, others who have a fiduciary or contractual relationship with the company and treats them as insiders for the purpose of this law. So what happens if you acquire some information about the company you're working in and pass it on to your brother-in-law, wife or somebody? Well, the regulators have thought of that also, and therefore even relatives of key personnel working in a company, directors, etc. are also treated as insiders for the purpose of SEBI's regulations. Today, if you indulge in insider trading about a listed company, you can be fined a sum of up to 25 crore or 3 times the profit that you made from the illegal trade, and you can also be imprisoned for a period of up to 10 years. In fact, recently, SEBI convicted Ramalinga Raju and others on the Satyam case for insider trading charges and levied a huge fine on them amounting to over 1700 crores. To a lay person who's just joined a company or a young person who's just working in an IT firm, sharing some tips about the company's performance may not look like a big deal. Regulators worldwide take a very serious view indeed of such behavior, and they can levy a very heavy penalty on you for sharing insider tips about your company. In 2012, in one of the largest insider trading investigations by any regulator worldwide, the US Securities Exchange Commission convicted Raj Rajaratnam of Galleon Funds, it was a hedge fund, and Rajat Gupta, former McKinsey boss, on insider trading charges. In that particular case, basically Rajat Gupta was working at Goldman Sachs and he got information about the company in advance of public shareholders, shared it with Raj Rajaratnam over phone, and the latter used it to make some very big trades for his hedge fund. It was considered to be one of the largest insider trading cases in the history of the world securities markets. So the US court imposed a fine of $92 million on Raj Rajaratnam of Galleon Funds and also had a prison sentence of 2 years for Rajat Gupta, which he appealed against. And many felt that it was a very serious kind of view that the court took of insider trading infractions. India too has seen its share of high-profile insider trading cases. The conviction of Satyam Computers Ramalinga Raju by SEBI was based on an insider trading charge. Similarly, large companies like Hindustan Lever, Reliance Industries, etc. have been hauled up by SEBI on several occasions in the past for cases of suspected insider trading. In fact, India's new insider trading laws are far stricter than those in the US because they consider not only company personnel or employees but also others as insiders. Further, they also bar you from sharing the information in the first place, leave alone trade on them and make a profit. So the next time if you're working in a company and get access to information about a company's financials or plans for the future, think twice before sharing it with your friends, even on an informal basis. Because even if you do it informally and without the intent to profit, it is still a case of illegal insider trading.